In the United States today, we have, in effect, two governments. We have the duly constituted government, then we have an independent, uncontrolled, uncoordinated government in the form of the Federal Reserve System, operating the money powers reserved for Congress by the Constitution. You can turn back now, or learn the stuff they don't want you to know. At first, the idea of a stock market seems kind of strange. You have people around the world buying and selling these intangible pieces of ideas, really, and then based on the performance of the company and their percentage of the idea or the concept of the company, then they get something tangible in return. Well, arguably tangible, money, or they lose money. Best way to explain this would be through example. So theoretically, it's a great idea to have stocks and stock markets. Let's say that Matt and I are making pizzas and we're really good at it. That part is true. And we say, man, let's start our own pizzeria. How cool would that be? And then we go, okay, well, to make this thing, we need capital, so we need investors. And we go around and we find different people who will invest some sort of share of the amount of money we need to make this amazing pizzeria happen, which I don't know the name of yet. Amazing pizzeria, whatever. There's probably like 30 of those in New Jersey alone. Anyhow, we have these investors putting in cash, and in return, they're getting shares that represent a portion of the overall investment. So we're doing well, right? This amazing pizzeria is cooking along for 2 years, and then some people have made enough money that they want to get out of it, but they have to find someone to buy their share in the company. So that's where stock markets come in. A stock market is just like your local supermarket. There's a whole bunch of stuff for sale, and there are a whole bunch of people who meet up to buy it, except that sometimes these people will buy something and then sell it themselves in the same trip to the store. And ever since these things started, people have been trying to figure out how to crack the code of this increasingly Byzantine system. How can I make the most money? How can I make other people lose more money than me? How can I basically get over on everyone else? And then, of course, there are a few poor folks who are trying to make everyone else follow the rules somehow. Good luck with that, SEC. So this is the point where you might be saying, oh, whoa, that doesn't sound like the most stable thing. No, it's not. It's kind of like a house of cards that is notoriously vulnerable to breezes. We're talking about things like resource shortages, rampant speculation, rumors of upcoming things that could be geopolitical events or corporate malfeasance, etc. So crashes happen, collapses happen, and according to the mainstream, it's really difficult to figure out why these happen. According to more fringe research, there's stuff they don't want you to know. So let's look at one example. The crash of 1929. This remains one of the biggest financial catastrophes in United States history. According to the mainstream version, there are several clear trends that worked together and ultimately led to the crash in 1929, and they're visible in retrospect. These would be things like rampant speculation, booming markets that all hit record levels continually, right? And this led to new investors coming in. This led to stockbrokers and bankers working on deals that were leveraging more stock than ever before. Actually, at one point, there was an estimated $8.5 billion loaned out. And that sounds great for the economy, right? Trouble is, there wasn't actually $8.5 billion of currency in the United States. This was imaginary money. This was, like handshake, I believe in you money. So as more amateurs invest, and there are more and more speculators that are new to the game, right? This bubble continues. It blows up and up and up and up and up and up and up. And of course, you know the story, it burst. People are committing suicide. People are starving. The Great Depression is ushered in. Although people will often say that the stock market crash was the beginning of the Great Depression, there are other academics who will argue that this was a symptom of an abiding thing. Now that's the official story. let's go to the fringe. In a book called None Dare Call It Conspiracy by an author named Gary Allen, he argues that central banking forces purposefully triggered the stock market collapse in 1929 so that they could buy up stocks for pennies on the dollar, thus gaining more and more control over the stock market as a whole. So not just over certain companies in the market, but the whole shebang, the whole labyrinthine house of cards. And why would someone do this? Gary Allen's arguing that banks that purchase these stocks have the ability to manipulate the stock market to their whim for their interest, to trigger a boom and a bust, to trigger a recession, to make the stock market rise or fall as they wish. Now, if that's true, that's a very scary thing, and it ties into Gary Allen's beliefs about the Federal Reserve System, which we've covered in other videos. And this also goes to what Matt and I are looking at this week. We are taking a closer look at one of the big questions: has someone actually orchestrated a stock market boom or bust? And if so, what's the evidence? How did it happen, and why? So help us out here as we're working on this episode. Do you think that there is a group capable of triggering a stock market boom or bust? And if so, whom? Let us know in the comments, and like and subscribe to the videos. Check out our website, stufftheydon'twantyoutoknow.com. Or if you want to cut past all that rigmarole and you don't trust the social media stuff altogether, you can go ahead and send us an email directly. We are conspiracy@howstuffworks.com.
Looks pretty good. Thank you. But before I invest, I'm going to study the facts myself.
That's right, Mr. Finchley. All investors should study the facts carefully before they buy any stock.
In the United States today, we have, in effect, two governments. We have the duly constituted government, then we have an independent, uncontrolled, uncoordinated government in the form of the Federal Reserve System, operating the money powers reserved for Congress by the Constitution. You can turn back now or learn the stuff they don't want you to know. At first, the idea of a stock market seems kind of strange. You have people around the world buying and selling these intangible pieces of ideas, really, and then based on the performance of the company and their percentage of the idea or the concept of the company, then they get something tangible in return. Well, arguably tangible, money, or they lose money. Best way to explain this would be through example. So theoretically, it's a great idea to have stocks in stock markets. Let's say that Matt and I are making pizzas and we're really good at it. That part is true. And we say,